Vora is now joining us. He's Director and Chief Investment Officer at Max Life Insurance. Mir, good to have you with us here. Thank you very much.
Pleasure.
What did you make of yesterday and so much? I don't want to say water under the bridge, but I mean a fair bit of speculation about what could have happened and what are the circumstances, etc., etc. What's your sense?
The speed at which the small caps had gone up over the last couple of months. Something like this was waiting to happen, I would say, but I don't think it's anything unnatural or unexpected, because stocks are up 50, 60, 80% in a month, so 4 or 5 or 10% correction is to be expected. And if you notice the numbers, frankly, it's not the institutions, neither the domestic institutions nor the foreign institutions who've been driving this segment in the last couple of months. It's mostly been the domestic retail and HNIs. And when a certain stock goes down by say 5 or 10%, there is a follow-up liquidation of positions, etc. It happens. I don't think it's very unusual. And yesterday's move is nothing to be worried about, I would say. It's just one of those things where there was a bit of a froth in certain stocks and spaces. Not unjustified probably, but maybe stocks running ahead of time. But just natural correction.
I think that's also very healthy for the market, right? To get these periodic natural corrections, get the froth out of the system. But do you think that this could have a longer runway, the correction I mean? You can't even call it a correction yet. It's been a one-day fall.
Correct.
But you think that it's time to get a bit cautious in the mid and small cap space now?
In general, yes. I have been mentioning the fact that there is some froth being built up in specific segments of the mid cap and small cap space. More, I would say, in the small cap space. And not most of it is news based and fundamentals based. So I would not say that there is no basis to the euphoria or the bullishness, but it's just that certain stocks are discounting too much far out into the future. So it's just a question of valuations rather than fundamental questions. I don't think we are still in a situation where really shady companies have been doing the best or anything like that. Of course, there is a bunch of that. But so far, if you look at the top 100, 200, 300 stocks, they have been moving based on fundamentals. Is the valuations that are another question, and these kind of corrections probably bring some sanity back into the valuations.
Okay, all right. Hi, Mir. Good to have you in the studio. Mir, what do you make of this PSU theme that has played out? Because that's caught everyone by surprise. Everyone is saying these guys are not going to perform big time, in terms of a stock price. And now I don't know what they're factoring in terms of the forward earnings, the street that is. Some of them profitable. Float is very, very limited. How are you all approaching the PSU theme? Have you all participated any of these themes? Either it's the banking names, the defense, or the railways?
I'm not looking at it as a PSU theme.
Okay.
So if you notice, it's been stock specific and sector specific. For example, the OMCs have not moved.
Yeah.
Right? Because of their fundamentals. What has moved is stocks in the PSU banking space, improving asset quality. Defense, we all know the theme. Railway linked companies, because government spending has gone up. So I think it's been a sector and stock specific move rather than clubbing everything together into the PSU space move. Utilities have done well because there's a power shortage, right?
Correct.
So you have the coal producing companies, you have the utilities which are probably investing a lot into the renewable space. So there is company specific positives which are driving the stocks. I'm not clubbing everything as a PSU theme.
Okay, but which one of them has a better runway according to you? If you have to look at it. Because some of these stocks, they've run up quite a bit. And my fear is a couple of them, which, I just don't want to name them because unnecessarily problems out there. But, some of them have already run their distance, it seems. And the float is very limited.
Absolutely. So for institutions like us, it doesn't make sense to participate in those really, low float companies. So we haven't, because even if we wanted to, we couldn't, right? But the larger ones are still liquid, and especially in the larger, some of the names like utilities, energy companies, the valuations are still quite okay.
Okay.
What about some of these spaces that have come back after a while? Technology, for example, large cap IT, even mid cap IT has come back. Many of these stocks are up 20%. Many of them are sitting at 52-week highs. Your thoughts?
That's because the US economy has done much better than expected. 3 or 4 months ago, the situation was probably a hard landing kind of a scenario was being painted. Now it looks like a softer kind of a landing scenario. So the fears about the US economy have not been as bad as expected, and that's the reason why you see the IT sector coming back.
But would you put money to work here?
I would, because IT sector after 22 has still underperformed. So while they're up from the bottom, valuations relative to the rest of the markets are still attractive. And if we are saying that a lot of the mid cap and small cap space looks expensive, then this is a good space.
So large cap is what you're looking at.
Large cap and financials. financials are still not run up that much.
Let's just have the the small cap index up on the screen. It's now up 1.2%, the index. So, that's the first rate, 12,600 on the Nifty small cap index. And let's have if you can pull up the Nifty micro cap index, right? That's the the smallest of the lot in terms of market cap. That is up almost up 1.5 odd percent. So this is where bulk of the damage was, the small cap and micro cap index. And in that space, there is a buying which is coming back very, very clearly. You got what, 3.5:1, 4:1 kind of advanced to decline ratio. So I want to say again, this is early days, but it's a regular kind of, we're used to 0.5%, 0.6% higher opening on the mid and small cap index. So it's a normal kind of open in that sense, and not a manic day like yesterday. I think by this time yesterday, maybe a little later, 10-15 minutes into the session yesterday, things had started to come off very sharply in that area. So this is not bad. Mir, you put out a post on Twitter, and I found it very interesting. You're saying that AUM in mid and small caps, and I'm just paraphrasing you, and I want you to explain that, is larger than AUM in large
cap funds. Yes.
Large cap funds?
Yes. The total AUM of...
is that true?
It is true. And,
what are the numbers? Give us if you remember the numbers.
So if I remember the numbers, mid plus small cap funds are about 4.2 lakh crores now.
Okay.
And large cap funds are probably about 60% or 70% of that. Pure large cap funds.
Okay. So pure large cap.
So if you look at the equity AUM of the MF industry,
okay,
the large cap fund AUM is about 14%. The flexi cap category AUM is about 15%.
Okay.
The mid plus small cap segment is around 12 plus 13%. So approximately 23%, which is larger than flexi cap, larger than large cap.
And mid
plus small is 23.
Yeah, but that will be even larger because mid cap funds would also put money in. Would they have exposure in large caps as well, or no? I mean, very little.
It can't be more than
vice versa.
35. It can't be more than 35% in any case because of the.
But it'll level out, right?
Yeah.
Because large cap funds.
But then you also need to count the mid and small cap exposure of the flexi cap funds,
correct,
which is the largest category today.
So 23% mid and small, as compared to
14% pure large cap.
Pure large caps. Wow. And has this happened before, or is this?
I think it's the first time. And another statistic which was there in my previous tweet, if you had read that, is that the number of folios, mutual fund folios, in just small cap funds has for the first time exceeded the number of folios of large cap funds.
Wow.
Wow, that's interesting. Okay, so now we know where that froth is coming in from, right? But thank you so much for joining us, Mir. Appreciate your time here
Always a pleasure.
on CNBC TV 18. Thanks for joining us in the studio.
Thanks.